FXEmpire. This is Chris taking a look at the S&P 500. And you can see we've been all over the place. Electronic session late, or I should say early. Asian trading, Australia, New Zealand, late U.S. trading. Got a headline crossing the wires that the Chinese were going to leave the trade talks a bit early. And that, of course, had the markets freaking out. So everybody sold off. And then, this was a deliberate spoof. This happens a lot in the Australian and New Zealand trading hours. So that's why you shouldn't trade that time frame. But what happens is somebody puts something out like that, the volume's thin, they get a reaction they want, they collect their profits, and they get out. It's a good way to earn a massive amount of money in a short amount of time if you get it on the right Twitter account, because algos trade this nonsense. So the South China Morning Post turned around and denied this story because it was attributed to one of their sources. And then the market turned right back around. You can see that's where we are. So I think at this point, you have to look at this as a market that's just going to be way too dangerous to trade. That's the most professional setup I can give you right now, is to stay out of this market. Nothing good can come out of this scenario. Yes, you might get lucky and you might be long and we might go higher. But even if we get that blast higher, one thing that you should keep in mind is next week's earnings season. So that's going to throw a whole new dynamic into this. You can make the argument that maybe we're just going to hang between the 50 and 200 day EMA, and I wouldn't argue with that. But I'm just not putting any money to work here.